Hi, everyone. Welcome to Crypto DeFined for July 14th, 2022. My name is Kathy Chu. I'm your host for this weekly interview series where we look at the innovators, the disruptors, and the skeptics of the now $1 trillion crypto industry. Crypto DeFined is produced by TruthDAO, a very new journalism organization that is growing quickly. We are within a DAO, and our focus is unbiased, nonpartisan journalism. You can visit us at truthdao.xyz, join our Discord and our Telegram communities to join the conversation. Today's guest is Nitin Kumar. He's both an innovator and a disruptor in the crypto industry. Nitin is a co-founder of ZByte, which is a Web3 startup that is working on a platform where low-code and no-code apps can be built. ZByte recently raised $10 million from private investors. CEO magazines have called Nitin one of the top 10 CEOs to watch and the most influential executive. He's also known as one of Silicon Valley's magnificent four for being one of the most well-connected and networked executives. Nitin is a former Nitin for being here today. We greatly appreciate it.
Thank you very much, Kathy. It's a pleasure.
Great. Well, we have a lot to talk about. And I feel like before we delve into Web3, I mean, everything is about Web3 nowadays. But before we delve into it, let's talk for a minute about the fallout in the crypto markets, Nitin. The crypto market now is less than 1 trillion. That's less than a third of its size when it topped out in November 2021 at 3 trillion. We're seeing lenders like Celsius and Voyager file for bankruptcy. Celsius just did this yesterday. And there are a bunch of other firms teetering on the edge. Very broadly, Nitin, how do you look at the crypto industry nowadays? And what do you say to people who say the sign of these firms collapsing is a sign that crypto is a house of cards?
So there's a number of things that need to be put in perspective, right? There is a macro factors at play. With inflation, people don't have that extra money that they used to put in. There is a war going on in some parts of Europe, which is also impacting how macro is behaving. Clearly, all the money that Fed pumped into the market is now getting slammed the brakes on. So that's changing. That's sort of the macro factors, right? Inside the micro, inside the crypto, I think there is not room for these many cryptocurrencies. I don't even think cryptocurrencies is the right word anymore. They should be called digital assets. 19,687 cryptocurrencies in a 1 billion market. Something doesn't add up, right? It's time for A, consolidation, B, cleansing. And the investors are getting a little more savvy and not running after those meme coins and all that kind of stuff. It's also time for looking at which protocols actually produce free cash flow and fundamentals, right? So yes, crypto is a pack of cards, but you can't sort of take all crypto and paint them in the same brush. There are commodities, there are currencies, there are meme coins, there are all kinds of things there, right? And there's also, remember, in the stock market, there are investors, right? Here you have the gambler, the speculator, the scammer, the real investor and all that. So I think it's cleansing time, which is healthy for the market. The next wave of foundation is going to get bigger. Also remember, bear markets are a feature of the cryptocurrency asset. I would not worry about these short-term things because anybody who's investing for less than a year kind of has the signature of a trader. There is never a get-rich-quick in crypto, right? For one or two examples that you see who got rich, there are probably hundreds and thousands who got wrecked. Actually focus on the real assets that produce real value and ignore the rest, which is how any investing should be done.
And Nitin, just to clarify, you mentioned you can't paint everything with the same brush. So there's still a lot of promise in crypto, is what you're saying, but there is a house of cards, as some people allege. So there are both sides to this. Is that correct?
There are absolutely both sides to it. There are coins that don't need to exist, right? And again, what problem are you really solving? Do you really need a decentralized Slack and a decentralized restaurant and a decentralized computer and all that? Do you really need it? Ask yourself. It's a good concept, right? But there is no need in the market, and definitely not for 50 of those.
Okay. Thank you for clarifying that. Now, the collapse of these lenders and hedge funds, I notice it's fueled this very interesting conversation about DeFi, decentralized finance, and centralized finance. And there have always been detractors of both. The interesting thing about some of these firms that are collapsing, they're in the centralized finance industry, which basically is people managing assets, but they were investing in risky DeFi protocols in some cases. So I guess, could you put this in perspective for people a little bit? You're kind of an expert in the space. You know, DeFi is governed by smart contracts. How do you look at the intersection of CeFi and DeFi, given everything that's going on?
This gets into a very philosophical question, but let me answer that in a couple of different ways. Okay. So there are people who are peripheral to Web3, and there are people who are core of Web3. There is a lot of Web2 companies, including every single centralized exchange, the likes of Coinbase, the likes of OpenSea, all that. They just bear the signature of Web3. They're not Web3. They operate in a very old economy style. DeFi is purely code. Okay. The innovation also happens at the root, at the smart contract level, right? It's a bottom up business, and there is some inherent risk management issues that people need to look at. Okay. And when you look at the backgrounds of these people, they have been founders of either software companies, or they have been either mathematicians, cryptographers, and all that, right? You need to manage all dimensions of risk, and I think crypto has that problem all across. Market risk, which is commercial risk, operational risk, which is what kind of is going to be. There is the technology risk. You get these bridges and all these things hacked like by the minute, and there is this whole contractual risk that we're dealing with, right? And it's a challenge. But these patterns, whenever a new industry comes in, are very visible. Okay, go back into probably the last decade, or even probably the first part of the century here, right? All the Silicon Valley companies come and say, "Oh, I am not a bank. I am not finance. I am PayPal. I am cool. I'm software. I'm Silicon Valley tech." Suddenly, what happens? Oh shit, regulation, right? I have to comply to this and that, otherwise I can't launch. Netflix. Oh no, 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 we're not that media company. We're a new media company. We're a software company. Blah 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 blah. Guess what? Rights management, right? You need those skills. You have to really go back and see what are the fundamentals of skills. Tesla, I'm software on wheels. Guess what happened? They agreed they're a car company because you need to know, you need to have supply chain debottlenecking and all that, right? Ultimately, so this is a signature that every new innovation and bearing into the new creating the new economy of that decade bears, and people will learn. It's just a maturity issue. Um, Nothing new, nothing different here. It's just the severity may have been compressed with three of them going into 1 week. But this is nothing new when innovative companies spawn a new industry.
Okay. And that's a very good point you made, that just because you brand yourself as Web3 does not mean you're Web3. So that's a very good and important point, Nitin. So let's talk about Web3. First of all, could you define Web3? A lot of people hear this term just bandied about. I mean, we just called ourselves a Web3 journalism platform. So talk to me about, what is your definition of Web3?
Look, Web3 doesn't have a universally agreed definition, and my definition may completely differ from people in the audience, or perhaps even yours, right? What I can do is that I don't want to be a crypto prophet. Satoshi is enough for the crypto world. I will just give you the features of Web3, right? There needs to be adequate decentralization, adequate being a very important word, right? You don't need to be a decentralization maximalist. It's like, okay, one entity or one individual should not have influence or control. Now, I don't know where you draw the Web3 line. I can debate whether it's 83% or whether it's 95%, and you can argue with that. It needs to have adequate decentralization, number one. I think the community has to drive and if it can be in the form of a DAO or a loose community or whichever. It's community driven. That's the second feature. Creators are rewarded. That's the third feature. And infrastructure and security have to be very robust. Those are number 4 and 5 features. I think those are the top 5. Now, arguably, you can add another 3 or 4 to them, depending on the use cases. Which becomes more important is a matter of choice.
Okay, and you've been having a very interesting conversation that I've been following on social media, Nitin, about how Web 2 needs Web 3 to survive. And that is not the view of everyone, and that's not the view that some in the Web 3 world have put forth. So talk to me about why you think Web 3 needs Web 2 to survive.
So Web3 does need Web2 because today the issue is the following, right? If you take what is Web3, Web3 is building for Web3. I don't think it has the infrastructure or robustness. The second thing of Web3 is that the principles, many of those principles are rooted in Web2. Community, all the Linux community and open source community, product management, right? The UI UX, it's so difficult to use. You have not ported any of those skills, right? It's very, very difficult. And if you look at what is happening today is that you are taking all these raw protocols, be it from Ethereum to the latest guy, whichever layer one. It's almost like, hey guys, here's TCP/IP. No, go build the internet. Nobody can do that. It's very, very difficult. It needs to be scalable, stable, usable, and hooked into principles of business management and principles of technology. Okay. And many of those skills are in Web 2. Yes, there is some old economy thinking and baggage, but retooling that is fairly critical. If Web 3 needs to get usable at large scale, that is going to be driven by adoption by enterprises and adoption by institutions, right? And when the institutions came in, even the price of Bitcoin and all that things changed. So it's even if you take something as decentralized as Bitcoin, when did it take off? When the old economy started to do the adoption, when institutions came in. And Web3's biggest issue is Web3 today is building for Web3. Web3 is not building for Web2, and I think that has got to change.
Why do you think there is that attitude that the Web3 Maxi attitude that is out there, and do you think that's unhealthy for the industry?
Anything Maxi is unhealthy. Okay, let's put it that way. I think the whole issue is that there have been flaws in Web2. Okay, there have been institutional and systemic flaws in Web2, right? But there are those flaws in Web3 as well. So what happens with the maximalist is that you don't really kind of pay attention to that, but you attack Web2. The last decade was built for the aggregator. Okay, and the power was with the aggregator. They centralized everything and they sold your data and et cetera, right? But you can equally give that to the stress testing of these Web3. Right now, there are decentralized players, semi-centralized players, raw protocol, all kinds of scammers in there. Because the robustness of a systemic level thing hasn't come in, because disciplines like product management, protocol management, and all those things have not yet been incorporated into the Web3 stack.
Okay. Nitin, and just for those who don't know, Maxi attitude is basically when you're a Maxi in the industry, it means you're a proponent of only that specific thing. So if it's Web3, you're a proponent of Web3, but not Web2. Is that correct?
That's right. And you can drag it to the extreme, right? Even 1% decentralization, they will puke on it, which is really going to sacrifice usability and adoption and scalability. And that's not the intent of Web3. Web3 needs adoption from everywhere, right?
Okay, so let's jump into ZByte. You recently started ZByte, which, as I understand, is a decentralized platform that will allow developers to build all sorts of DApps, which basically is DApp is a decentralized app. Talk to me a little bit about why this is important and needed in the Web3 world. And, what types of DApps do you envision being built that are not currently out there?
Yeah, so let's go into what is a decentralized platform and why that is required. when we really talk to the enterprise world, we believe that there is a little bit of an empathy required there. And we're not the Web3 Maxi who's kind of attacking these old economy enterprises. There is a problem of inertia there. There is a problem of innovation there. There is a problem of bureaucracy there. But also bear in mind, these are the guys who have the biggest assets on the balance sheet as of today. Okay. And they do really want to get into the innovation side of it. Again, I'm just going to sort of go back to the point that if you go and give them an Ethereum or a Cardano or a work protocol, and it's like, okay, here's TCP/IP or HTTP, go build the internet, they're not going to do it. So there are issues there on usability, and let's unpack them one by one. Issue number one is that Web 2 and Web 3 identities don't talk to each other. On Web 2, we are very used to logging in with our email IDs, our social, our Google, your, Okta, whatever you use. On Web3, you need to open a wallet. That is your identity, and you have these long phrases that you need to remember. It's very scary for them. They're not going to do it. That's problem number one. So we took that and we incorporated it as a key feature, right? Blockchain developers use very obscure skills which are not enterprise native. When I say obscure, in a good way, not in a bad way, they're not enterprise native. They're out there in the wild in the community. Solidity, Rust, Haskell. And these guys are not cheap. They cost a lot of money, and enterprises may not be used to paying programmers that much, okay? So we said, okay, fine, let's use the skills that are available, then make a low-code, no-code platform people can drag and drop, right? You don't have to train your workforce on these complex skills. The third issue is Web3 inside an enterprise is technically unusable if it doesn't have integrations into the legacy systems, your CRMs, your ERP, your other systems of record or systems of engagement. So those integrations have to be a core feature of the decentralized platform. Then you come on to the big issue, which is sort of holding Web2 back. Now, if you're Michael Saylor or Elon Musk, I'm not sort of addressing you, but generally people are scared of having crypto on the balance sheet, right? So we made that problem go away. They can pay with fiat. And then they don't want to be threaded to one protocol. So we became multi-chain, right? So we support almost everything. Right now we've got a few, and then there's going to be a few more that we add on, right? So this decentralized platform sits in between these raw protocols and the legacy systems. Now, on the decentralized platform are built two things: the creator economy with the world's first DApp store, which will be launching in a few months. The DPlat is just about getting into open source in a few weeks from now. So that world's first DApp store is for the creator economy, where people, including people on this call, could come, drag, drop, build your apps, right? Those apps can be categorized as digital assets. It's the simplest apps are like, escrow accounts between people triggered by a smart contract. You can have carbon tracking, which is an enterprise ESG issue. Media has so much rights and royalty issue, and that's a very inefficient chain, right? It's a beast of a problem, but where do you attack it from? So there's a lot of that stuff. There's decentralized advertising. So there's many apps on the consumer side that can come and build, right, from simple stuff, and that's going to be run by a DAO in a decentralized manner. On the other side, there is a commercial and for-profit entity, ZByte Inc. That is actually telling the enterprises to use the DPlat and build whatever application without worrying about all these issues that I talked about. On that one specific use case we have built, which is enterprise NFTs, which go into the enterprise, right? And NFT is a game-changing technology. It's not a new concept, but it's a game-changing technology in the form it's being delivered. So we're seeing a lot of action in the enterprise for that, and not the collectible use case. It's the real use cases.
Okay. So, and you mentioned that it can be, you basically made it easier to pay by fiat and solve that issue. And, right now, a lot of enterprises are reluctant to adopt cryptocurrency. Do you see this changing? I mean, right now, Elon Musk, Michael Saylor, do you see many more companies adopting cryptocurrency, not just because of your app, but I'm talking about just in general?
There's some structural reform that is required on that, right? One is that there need to be regulatory clarity on what asset is viable on the balance sheet versus not. FASB is very punitive for people who hold, from an accounting perspective, hold crypto on the balance sheet. Okay, and the number one challenge is that if you sort of have a loss, you got to declare it, and then the upside you can't until you sell it. So there's some accounting issues there, and this volatility is not something that people can stomach right now, right? And as I said, the bear market and uncertainty is not something the investor wants to live with. They can live with a range of uncertainty, but not total uncertainty in the market. So as the structural reform comes, I believe crypto is going to be a viable asset and enterprises are start going to adopt it. However, we need the financial, operational, and accounting clarity to have the structural reform in place.
Okay. Now, Nitin, I think most people would agree that we're in the middle of a crypto winter. And I've heard people in the industry talk about the way out of this crypto winter is building and innovation. Do you agree with that? And what do you see coming out of this? Most importantly, what innovations are at the top of your mind?
So I think that philosophy is completely flawed and mistaken. You should be building in the crypto summer as well as in the winter. I don't know why people keep coming back to this thing. It's winter build. Like in summer, if you had built something robust, meaningful, and usable, you do not worry about the winter because your protocols actually produce value. This is just a mere excuse. As a good entrepreneur, good executive, good CEO, good innovator, you should always be building.
Do you think though people are saying that? Do you think that idea, because you hear it so much, is that just to inject positive vibes into the market when there's so
There
much
is
going
there
down?
is there is that, right? And if you really take a look at that, this is a matter of execution. And if you have not executed well in the bull market, what makes you think you're going to execute well in the bear market, right? So I think those cultural things need to be put in perspective on how a particular company or a protocol or a project executes. The second important issue, what people tend to forget, is that building is not cheap. It is not free. Okay, it requires money, time, energy, resources, community, and all that. So I think it's it's one issue to go and say this build in a bear market, and other issue to execute this. You should always be building.
Right, right. And I guess one point of view I've heard is that there's more time to build in a bear market because you have nothing else to lose. Everything's down. But I see your point. You should be building in both
You should
markets.
be building all the time, and this comment usually comes from people who see the uptick and they just launch a protocol for the sake of it, right? Because they want the hype. The real innovators who are slow and steady have lasted the test of time. The others have all gone away. I just don't see how many of these guys survive. If you take a look at the top 10 in each cycle from a 2013, 17, and all that, there's like two in the top 10.
Okay. Okay. Now, switching tracks, but still talking about innovation, I've seen a few posts that you've commented on or liked about fashion, NFTs, and the metaverse. And I've been really fascinated about that. I've been meaning to ask you about that in our past conversations, but we've been so busy. So, talk to me a little bit about where you see the promise in this area. Why is this a growing area, and how do you connect all these fashion, NFTs, the metaverse?
So NFT is nothing new. Okay, it's actually ever since human beings have existed, NFT has existed. Your fingerprint is nature's digital identity and the biggest non-fungible token. Okay, now if you think about it as a digital entity, you have many horizons. Okay, to really kind of figure out how to use an NFT, as opposed to seeing it as a collectible, right? So NFTs have got a lot of utility in the real world. As we think about it, our own use case NFT for the enterprise has got many use cases, right? Which has got the campaign management part in the CRM systems for chief marketing officers. You improve your effectiveness of the campaign. You engage better, right? You reach non-email natives, and you reduce your cost of customer acquisition and retention. Now, ultimately, what happens is that the wallet owner has got all the browsing experience in that they can sort of monetize it in as many ways they want to do it. So you shift the era from CRM to ORM, owner relationship management. Consumer brands have started doing this, and that has become very interesting. You have issues with warranties, right? The warranties of your mobile phones, your devices, and all that. If you sell that to somebody in a secondary market, you can actually put it as an NFT on the blockchain. It's very trackable. You can look at maintenance. You can look at all of that. There's some very, very fascinating use cases that come in from an NFT angle for the enterprise. The ORM concept is shifting, And it's very evident that even people like Salesforce in their Web2 world have launched an NFT cloud, if you're familiar with that press release that they talked about. So the market's self-validating how powerful NFTs are, and the world is going to shift from CRM to ORM, and nobody can just take your data and sort of sell it. The owners will have to monetize it as they want. Now, take that thing into metaverse. There are many metaverses. I don't know which one is going to win, but all I can tell you is that the experiences of Metaverse 1.0 are going to be very drastically different from 2.0 or 3.0 come 4 or 5 years, right? Think about them as countries, right? You have all all countries in the world, right? They can coexist in peace, and somebody has the Great Wall of China, the other has the Eiffel Tower or Statue of Liberty, right? So they will have their own sort of monumental appeal, right? And there are also niches evolving there. Having said that, they have to produce GDP for survival, which means the economic activity on them has to be very clear. That to drive the GDP and adoption, not just people hanging out and chatting, that's a different story, right? You have multiple things that we're seeing. We probably spoke to like hundreds of people in this domain. And today, what we see is that gaming and fashion are the two which are way ahead in the metaverse, right? Creators, they want digital clothes, digital shoes. The Nikes and Adidas of the world are raising awareness. They're testing new markets. They're connecting it to a digital twin and all that, right? So it's a very, very fascinating space. Creators, for the first time, have got the ability to monetize clothes in the way that they have not done it. They're producing clothes made of fire, glass, which is not possible in the physical world. So your imagination is getting fired up. The generation that comes after Gen Z is Gen Alpha, right? I learned this new terminology. Now I don't know what comes after that, but Gen Alpha. There's some statistics and data that I saw that they're already spending 8 to 9% of their wardrobe budget on that, right? Kids,
On
basically.
these digital,
Yeah.
basically dressing their avatar, correct? And
Dressing their avatar or augmented reality. I mean, my daughter has some earrings for Zoom. So there are some interesting things that are emerging, right? But that's the current state, Kathy. We believe that there is a large market that's coming in, which may actually supersede some of them, some of the gaming and stuff like that, right? There is digital real estate, which is working pretty well in that direction, which is sort of developing metaverse properties and all that. There is events in the metaverse, and Kathy, you are one of the early adopters here, right? We're having this event here. We could have it in any other place. And I think the whole retail and the gambling, the casinos, right? They're actually a fairly big market that's coming in there. And we believe that they may actually overtake the size of fashion and gaming that is today. But there is some interesting data and stats on how and where kind of entering these markets in various pieces of the value chain.
have you invested in these companies, Nitin, or are you just studying them and researching them carefully?
Well, I've invested in some digital assets. I've invested in both Sandbox and Decentraland, but I'm generally studying the trend and seeing how things go and where people are thinking, what is the thought process, and a couple of other vectors that can be very disruptive, right? This multi-metaverse and interoperability and all. There are some serious adoption barriers there, but I think there is room for multiple players in that space.
It's a very interesting and growing space, and one of the guests that will be upcoming on the show, she was, I believe, one of the profiles was her was that models are wearing digital clothes, which I don't quite understand now, but I'll have to table that until a future date. But the idea of even
They are, yeah.
full dressing with digital clothes, don't quite get that yet, but. Nitin, another topic you've written about extensively that I want to touch upon because it is a hot topic in the market is wash trading in the crypto world. You and I have spoken about this extensively. I've quoted you in an article about NFTs and wash trading. You've provided a lot of insight. What I wanted to ask you is, during a bear market like this, do we tend to see more wash trading or less, whether it's in Bitcoin, altcoins, and in NFTs? And of course, it depends on what day you look at, what week you look at, what month you look at. But do we tend to see more or less wash trading generally in a bear market?
Yeah. So this is the first bear market where NFTs are coming, so I don't have a good answer to that, right? But I'll try to. answer the other two to the best of my abilities. I think there is a ramp into the bear market, right? Which is when the most manipulation occurs into the market, when you're descending into the bear market, right? What happens is that that's the time the manipulators can actually do a sort of a maximize their their proceeds. Usually what happens is that there is a bear market rally, which is called the dead cat bounce in the crypto circles, right? The dead cat bounce is the second area where you see maximum manipulation, wash trading, and all that, right? Once that phase is over, generally crypto loses interest. So there's not enough volume to drive that wash trading, and even if you drive it, it's expensive and it's risky. So you tend to see heavier than bull market wash trading in the prior two examples that I gave you. And when you're an absolute bear, the volumes are low, so you will see a little lesser of that.
Okay, interesting. Something everyone's watching carefully. Now, just going back quickly to the meltdown of CeFi lenders, what do you think caused this, Nitin? And importantly, what do you think will change in the crypto industry after we've seen all these firms collapse? Will anything change?
I mean, I hope things do change, right, for the better. I think there has been one word that is responsible for the economic condition we are in the whole crypto market, and that is called leverage. Okay, there is a general unsophistication in the investor market. Crypto assets are easy, and a lot of these exchanges give you like almost even 1 to 1,000 leverage or something, right? I don't take that too seriously, but 1 to 100 is definitely on there. I have seen, I'm sure, somebody giving one to 1,000. That is a recipe to get wrecked.
One to
Responsible,
1,000 leverage, really?
yeah, yeah. Well, 1 to 100 is pretty common, right? 1 to 1,000 also is there, and these are unsophisticated exchanges, probably not in the United States. And these issues now create the greed factor, right? You want to take the ride and all that stuff. And by the way, if you are up against an institution or the quant guys, between quant and devs, I think if you play this risky game, the quant guys are going to win. Okay, so leverage has also percolated into people like a Celsius and Voyager. And look, they are not risk management people. Okay, it's very clear that they took leverage and leveraged the assets into very different places. And the one thing also, the high yield comes from somewhere. Okay, and whenever you invest in DeFi, you need to be very clear the source of that yield. You know, there is a saying in the world. I didn't make it up. Whoever made this up has thought through this. In Web 2, if you don't pay for the product, you are the product. In Web 3, if you don't know where your yield is coming from, you are the yield.
Okay. And what do you think, Nitin, is the most un under discussed but important issue in the crypto world today? What are you looking at these days that you think is important, but that people aren't focusing enough on, whether it's a problem, a solution, anything of the sort?
Yeah, look, I think there is some fallacies here that need to be sort of contained back, right? You don't have to build a decentralized version of everything. Number one, Web3 is not going to be a rip and replace of Web2. There is no compelling argument to do that. Yes, it can improve the efficiency, automatic governance, decentralization, and all of Web2. It is not a rip and replace. It's just not the way things are wired in the economy, or the infrastructure or the countries, right? So you need to find a real problem to solve. And the real problem to solve comes in sort of very three specific vectors. Web 2 does it, Web 3 does it better, better, cheaper, faster, whatever you want to put it. Web 2 cannot do it, and Web 3 can do it. There are very few like that. Third one, Web 2 and Web 3 work together and get the exponential effect. And I think enough people are not focusing on that. If you look at the successful use of how the old economy has transitioned into the new, go look at the Adidas example. 27 million in one afternoon doesn't get better than that, right? I mean, that's the exponential effect. And people like that are actually thinking through it. The second issue here is that a lot of entrepreneurs are coming here to sort of launch a coin and get the upside of it. The longevity and sustainability is not a character that is settled into this. There is entrepreneur training. If you go look at the Web2, there are Y Combinators to all these VCs. They train the investor, okay? They train the entrepreneur. And if you look at the migrants into this, these guys don't have any sort of training. They're either mathematicians, cryptographers, scientists, VCs. There's just no operating experience. These are all smart and brilliant individuals, but it takes a lot more than that to just build a business, a sustainable business, inject fundamentals into the protocol, understand the economic logic, and then scale something in a very systemic and longitudinal way. That infrastructure doesn't exist here. I think over a period of time that will come in, and people will be more thoughtful about what I launch, why I'm launched, what is going to be the economic throughput of this, and can I really get somebody the exponential effect of Web3 working with Web2, right?
Okay. And coming out of this crisis, hopefully there will be less projects and more utility, which you are big on utility of projects, not just launching something for the sake of launching, correct?
Yeah, and if you really think about it, there is some profound fundamentals in crypto. There is a whole bunch of the no coiners who keep saying, "Oh, crypto has no fundamentals; it's a very speculative asset," right? If you really look at where Web two and Web three are different, is that in Web two application captured the value. No one cares about TCP/IP or HTTP. In Web three, the logic is flipped. Protocol captures the value, applications pay the toll as they pass. Okay, so Ethereum, even at this depressed price, is almost producing $1 billion of cash flow a month, because it has economic output. There's an ecosystem. It's sustainable and stood the test of time. Now, forget all the technical shortcomings. We can talk about that on another thing, right? Now, in the Web 2 world, imagine all of us owning pieces of TCP/IP, tokenized version of TCP/IP. It would be an amazing opportunity to own an asset that is in the internet and being that useful. So Web 2 did not create those opportunities. Web 3 has those opportunities. As long as your protocol can drive fundamentals and free cash flow and adoption, the tools and vehicles are community, it is utility, right? It is decentralization, and it is those things that were not previously possible in Web 2. If you're thoughtful about that, there are enough and more problems to solve and enough and more problems to improve. But if you're not thoughtful about that, I think we have a number of challenges in here that the market cannot accommodate these many.
Nitin, thank you so much for your time today. We greatly appreciate your insight. You can visit Nitin on his company website, ZByte.com. He's at Nit Kumar, Nitkumar, on Twitter, and he has a LinkedIn profile. Please follow him for more information. We will have a written recap on Nitin's interview coming in the next few days. Thank you, Nitin. Here's a quick look ahead at the week in crypto. It's been another chaotic week in the crypto world. Troubled crypto lender Celsius Network filed for Chapter 11 bankruptcy just yesterday on Wednesday. After weeks of trying to fight off bankruptcy, now that the filing has happened, the analysis of Celsius books will begin. One person to watch is Simon Dixon, an investment banker who's disclosed that he has large sums of money in deposit at Celsius. Dixon had been invited to join Celsius's board in recent weeks, but declined, as he has said that he feels he can help advise the company and depositors better from the outside. Before the bankruptcy filing, Celsius had been paying off some of its loans, giving depositors hope that they'd get their funds back. Celsius had promised yields of 18% or more to depositors. Celsius then invested a lot of this money in risky assets. Meanwhile, the hunt for white knights in the crypto industry continues. Sam Bankman-Fried, head of crypto exchange FTX, has provided a lifeline to two firms, BlockFi and Voyager, but Voyager still slipped into bankruptcy. The crypto industry is watching to see whether Binance CEO Changpeng Zhao, known commonly as CZ, or Tron's Justin Sun will step in. Justin has said he has billions to deploy to potentially stabilize the industry. In DeFi, ratings agency S&P Global has launched a DeFi strategy group following the lead of Fitch and Moody's. Why is this important? The move is another sign of the entrance of traditional finance into the crypto arena, and we'll see how their move to institutionalize the crypto world will play out in coming weeks. Stay tuned for our next edition of Crypto Defined on July 28th. We'll be announcing the guests soon on our social apps, Twitter and Telegram. You can visit us at truthdao.xyz or the newsroom at truthdao.news. We'll have a story on the crypto meltdown coming later today, and we will also have a recap on Nitin Kumar in the next few days.